Bed Bath and Beyond. Can you talk about what happened? And it's up 23% on the day. I didn't even notice it happened until we did this podcast. What's going on with it?
Yeah, so I haven't I don't typically track the meme stocks. It's just not a place where I really typically will play. It doesn't mean I don't occasionally jump in and out of something if it makes sense. My buddy is a very big time trader. He moves like some serious money around. So he had reached out to me. He was like, "Hey, what do you think about this Bed Bath and Beyond situation?" And I literally was like, "What?" Same thing that happened to you and me about 15 minutes ago. I was like, "What situation?" So Bed Bath and Beyond has entered what appears to be a gamma squeeze. So a gamma squeeze is very unique. Like a lot of people talk about short squeezes where institutions, hedge funds, etc., will have shorted the stock. Retail nowadays, I'm not giving the traditional definition, but retail nowadays will come in and they'll start buying and buying calls and trying to take out the shorts, which causes the price to start to go up, not quite vertical, but really start to see a rise. Now a gamma squeeze is even more. A gamma squeeze, I'm going to read you the little definition because I think it's important to make sure it's super clear. A gamma squeeze, a gamma squeeze, listen to me. A gamma squeeze is when widespread buying and buying activity against short dated call options are happening against a stock. The reason we call this a gamma squeeze is because of the short term nature of it. So what happens here is money is now rushing in short term, creating massive pressure to push that price up, which now is forcing those short sellers to cover very, very fast.
And
But
this is
as
what happened to AMC
it's
2021.
very similar to AMC. AMC was a little bit of a longer time period, but it's very similar. Yeah. And the biggest thing here is that other institutions, high frequency trading systems, algo systems are recognizing the gamma and they're jumping in, which is accelerating. So oftentimes we talk about a crash, we talk about an almost downwards tornado, straight down, right? When prices go under. We start with crypto, against a number of crypto assets. With stocks, or crypto for that matter, but any asset class, it's the same idea, but straight up, where the buying activity explodes. And because of the volatility in those short-term options, that's what brings all the attention in and pushes it straight up. I know someone's going to comment like, that's not exactly what it is. That's an easy version of what it is. And it's particularly interesting because I looked at this, and if you look at the 1 month chart, it's up 228% on the 1 month, up 37% over 5 days, and up
Goodness.
23% today. So when you think about that, it's sort of like, holy moly, what has happened here? Because the first question I asked wasn't, is it being squeezed? It was, are they being bought out? Is there an acquisition? Are they being merged with someone else? And everything I've been told thus far is no, it's a pure squeeze play. Gamma's amping up. So just like, again, not financial advice, I launched some short-term calls. I was profitable very quickly today on those.
And you close those?
I will, yeah. I'm not looking to like. I don't need a 300% gain in a day. I just saw like a quick 20% was out. I don't need that level of risk in my life. I've high blood pressure, anyways.
I know.
But yeah, and I think the big question that this really brings attention to is, how do all of us, the normal everyday investor who's looking to make some money, how do we start to recognize what these patterns are and design a plan so we can execute quickly? And I think that's the $1 million question, because man, I'll tell you what, in a month, this thing's up almost 223%, right? If you were in this in, short dated call options, say a month long, I mean, holy moly, man, those options would have skyrocketed.
But don't you think that's a bit like, do you think the average person can do that much research to know a month ago this was going to be up
What if
200%?
there's a cheat sheet? And what if that cheat sheet was already made for you? I think that's the question. So if you were if you could delineate between what are the key things I need to know versus the noise, right? There's a ton of noise. And I think if we get to like, I know this is a silly way to think about first principles, but let's think about first principles for a squeeze. What's the fundamental thing we need to see in order for a squeeze to happen? What do you think? I'm asking you the question.
Um, you would need to see retail start to more traction on social around the
Sure,
stock.
sure, maybe, perhaps, but even more fundamental than that, in order for a squeeze to even happen, what has to already be there?
Uh, well, you need to see the price increase a little bit, at least some momentum on there.
Think other direction. I'm going to answer the question in a second, but I just want to see how you're thinking about it. So I know you're busy, so I'm going to let you get away with it. The big thing is, in order for me to even know what stocks are likely to get squeezed, I have to know which stocks are highly shorted.
I was literally just about
I
to say
know. I
short
know
is
you
where
weren't
you're at.
gonna. I know you're gonna get there. So the key for me is like, well, how do I just get some sort of a auto updated list?
Right.
And this is as simple as a Google sheet with an API to like, a Yahoo or Google Finance, and just have like a recurring top 20 shortest, most shorted stocks, ETFs, whatever. And I haven't done this yet, but I'm gonna be honest with you, I'm actually really thinking about doing it. And really just taking like the occasional what we call sort of like a YOLO call, or a YOLO short if it makes sense to do a put, although that's really not the play here. And just say like, look, stock's trading at $3 or $4. What would it look like to buy a $20 strike price in a
Right.
month or two out, right? And just do this every so often. And this is how you can sometimes generate that huge asymmetrical 10
The
plus.
question would be picking the right one that's going to
Well, the
move,
question is,
right?
the question is, if you can find them really early and identify at what level of shorting does it start to become more probable that it will see a squeeze.
Right.
If you can identify the steps of top 10 most shorted, maybe, and I don't know off the top of my head, maybe there's an easy algorithm you could build for this to identify typically when there is a squeeze and a recurring gamma squeeze, what were the indicators or attributes that led to that? And it would be very easy to pull all that data and put it together. Not very easy, but you know what I mean? It's doable. Once you know that, then you can just create like an indicator system to say like, oh, green, it's time to act. Yellow, I should start paying attention. Red, not enough movement. And just create a dynamic list around that. I just built a business idea for someone to steal, and they'll make a ton of money doing this, by the way. So unless I build
What was
it.
the reason Bed Bath & Beyond was as heavily shorted as it was? Was it just
Well,
slowing retail over the
they're in
past?
trouble. They've been in trouble for a long time. Other than Shark Tank pushing their products in there, really, is there a really that big of a need for a store that sells towels and kitchen gadgets? Not really. Huge
Yeah.
cost for retail. They're being outcompeted across the board. Online retail as well, like you said. I mean, they're just an old retail store that doesn't offer a whole lot. I mean, that's the reality of it. So the
Right.
stock's been going down for a long time. So it begs the question of like, how do you find asymmetrical returns in the market? Well, you do it the way we just talked about it, right? You look for the commonalities of what makes something go huge up or down, identify that, build a process for identifying them ahead of time. And then the beauty of it is, let's just say, for example, just a really simple example. Let's just say there's a stock trading at $5, and we think there's a growing amount of short interest, and maybe there's some sort of uptick in Google Trend searches for it, or on Reddit or wherever else. If I can get that indicator early, where it's trading at 5, maybe I go in and buy some like near-term calls of like $20. That premium for that $20 is going to be like nothing, man.
Yeah.
Because who in their right mind is buying calls 4 or 5 times the price a month out? Well, nobody. That's why they're so cheap. That's why you see people who will go and buy an option and get a 2,000-3,000% return. I mean,
Right.
the stock is up 200%. Imagine the options. I don't even know. I didn't even look. They must be huge.
Right.
So anyways, that's my take on that, on Bed Bath and Beyond. It's super interesting because, man, I'll tell you what, like retail has taken over these markets. Although, if I'm being honest, I don't really think it's retail. I actually think it's institutional investors who look like retail and have figured out how to trade like retail to not show themselves. But neither
Mm.
here nor there. But that's also a good accelerator for getting in and figuring out where they are.